when this blog was posted on Monday, what we were looking at is in the QQQ chart, we were looking at, and this is a 10-minute chart. So when you look for near-term directions, especially from a near-term horizon, you're better off using a 10-minute time horizon for these charts. So each candle here is a 10-minute price range. And there was a beautiful cup and handle. You can see that the left hand of the cup is near 420.47. The bottom of the cup was at 413.07. And the top of the cup on the right-hand brim was 421.18. So that cup and handle actually measured to 429.29. It was a perfect double on either side of the decimal of 29. But the blog was all about potentially, and this was before the events happened this week, that could the market be headed to a 429 kind of a move. I didn't expect it to happen this quickly, but in a couple of days after that blog, which is on Tuesday and Wednesday, the market had a significant upwards move. And by Wednesday, and this was triggered, Tuesday was triggered off kind of a bit of an upward momentum in the market after Monday's upward move. And the economic data was fairly okay, nothing heating up to cause concerns on inflation and so on. So that kind of helped stoke the rally on Tuesday. But the key part of the big move happened on Wednesday after Tesla's earnings. Tesla's earnings had a very strong positive reaction from the market. Tesla was so beaten down. Market was extremely pessimistic about Tesla, and that kind of caused a pretty big rally on Tesla's stock itself and also the market. And then came Meta and IBM on Wednesday. That had a dampener, and the market pulled back on Thursday. And then we got two big earnings on Thursday. One was Google and the second was Microsoft. Both are AI related companies. Meta is also an AI company, but the key issue with Meta was their huge spending on AI. That was taken the market by a little bit of a surprise. They didn't expect the margin and the huge AI spending to cut back on their, on their cash flows, and as a result, if Meta did not kind of provide the market the upward boost in their revenue and earnings projections for the year or for the next quarter, and that kind of brought Meta down quite a bit. In fact, it was a heavy breakdown in Meta. I'll talk a little when we go to these earnings specific charts of why Meta exactly met a target. There was a technical target towards 415, and it met that this week. And then from there it rebounded some. But then Google and Microsoft earnings were both strong. They both had strong upward moves, and it took the market up today. Also today, well, there's another thing yesterday that also was a bit of a dampener. Why Thursday we got the GDP. GDP for the first quarter was announced as a preliminary number at 1.6%. The market was expecting a 2.5, and this is from above a 3.4 in the fourth quarter. So there is a slowing down of the economy, and the word stagflation came into the picture. Everyone started being concerned that when you have a slowing economy, the GDP pointed lower, yet the inflationary pressures are there. That's a classic example of stagflation, the bad thing for the market. Market does not like stagflation, which is slowing of growth with higher interest rates, which means it actually prevents the consumers to continue their strong spending. So that was a buzz for Thursday, the word stagflation, the concerns of the lower GDP, and then the earnings setbacks from both Meta and IBM. From Wednesday, the evening, their earnings came out. So Thursday, the market got the hit. But then today was quite a surprise. The market snapped back strong, and then it actually closed a little above 431, right near where there's some strong resistance now, which previously was support. 431 to 433 is where it was very strong support for the market previously, and now it's become a key